Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 23rd of July. Starting off with a stock which I don't really like looking at because it's always rather difficult, but Argo Blockchain, and that's actually probably the reason for looking at it, Argo Blockchain breaking out of this falling wedge that there's been on the daily chart since the end of April, also back above the 20-day moving average at 3.8 pence, and while we're above that, looking for at least the 200-day line at 5.36. Best case scenario target at the moment up to 7 pence plus at the top of a rising February trend channel, that which I'm just about to complete now. And the time frame for that would be perhaps as soon as the end of next month. Next contender is Barclay Energy, which has made some progress. I think since the last time I looked at the stock, we had that spike, I think through 20 pence, which is, I think we were just in there before that, after the gap higher. Nice sideways move and then a fresh move to the upside. Ideally, we get an end-of-day close above the old peak from June at 29 pence. If we can achieve that, then the next target here would be the top of that broadening triangle from April, heading through to 40 pence. But interesting that we've had another gap, unfilled gap to the upside for that situation. A request in for Cobra Resources, which is nice. And in fact, it was yesterday when the shares broke out of that triangle from the end of March, nominally through the 50-day moving average level at 1.67 pence. End of day close today, back above the June intraday resistance at 2.1 pence. Should be enough to take the shares on for a retest of May resistance and perhaps even exceed it with the top of March trend channel target as high as 4.1 pence over the next 4 to 6 weeks. ECR Minerals, it's good to see a stock which has previously not exactly been the star performer start to become a star performer. The reason for the relative excitement this week is that we've got a V-shaped bull flag here, which, as regular viewers will know, tends to be a harbinger of good things to come. The V at this stage is an end-of-day close above the former July peak, the initial July peak of 1.94 pence. Either today or over the next few days could take the shares up to the top of that, or to the January resistance line projection, currently heading as high as 3.2 pence. Again, another one that could be hit, another target that could be hit as soon as the end of August. Next stock is a request for somebody I've described as the best private investor in London. He's done rather well on this stock. I won't name other stocks he's done rather well on because it would give away who he is. But rising trend channel here is one from May, and the floor of the channel currently at £10.90, let's say. Yesterday's, or £10.85, yesterday's intraday low. So at least while above that, we're in the bull camp for this stock. And best case scenario target here over the next 1 to 2 months, up to the top of the May rising trend channel at £19. So £19 really, while we hold above around £11. So that would be quite exciting given the way that metals prices are currently rocketing. Didn't want to include this stock in the selection today either. Horizonte has been a very difficult customer for the bulls over recent months and perhaps even years. But here we are, the shares here looking as good as they've done for quite a while. We've got a rising trend channel that you can draw there from the beginning of March, and top of the channel there around 5.3 pence. That's the target over the next few weeks, while we hold above the 50-day line at 3.5 pence approximately. If you are a fan of the shares and want to dream of good things to come, there is a possibility that the shares could hit the top of that rising December trend channel at 8 pence as the best case scenario, given the way that we also look to have an inverted head and shoulders on the daily chart from December itself. And this week we've broken a major resistance line from last September through the 3.8 pence level, and so it does look as though we're going to gather some momentum there for Horizonte. Stock which is rather more obscure for most private investors is Phoenix Copper, but I couldn't resist looking at today's second gap to the upside since the recovery here. The first one was in April through the 50-day line, which puts the shares on the technical radar. New gap here yesterday, well, in fact, on Tuesday through 30 pence, and while we're holding above the 30 to 31 pence area, looking for a top of March trend channel target as high as 50 pence over the next few weeks for Phoenix Copper. Stock which is one that has had a rather troubled history, but looks to be bouncing back. Pantheon Resources, beautiful move over the last couple of sessions after the break of that resistance line from June last year at 19 pence. So above 19 pence, very much on the bull tack. A weekly close above that neckline resistance at 20.8 pence, almost certainly giving us fresh momentum and the possibility of heading up towards the top of the 2019 broadening triangle at 45 pence over the next 2 to 3 months. So quite a big turnaround there for Pantheon. The name of the game with Remote Monitor has been to be patient, and I think probably waited enough now for the stock to get on its feet. We had the gap higher in April, filled the gap, and then bounced after that through back above the 50-day moving average at 0.28 pence. Nice push through the 200-day moving average today at 0.33 pence, and an end-of-day close or a weekly close above that this week should be enough to take the shares up to the top of that rising trend channel from December at 0.65 pence, a reasonable 2 to 3 month target, or less, hopefully, on that situation. Rockfire stirred a few shareholders at the end of last year with the massive gap to the upside and trebling or quadrupling of the share price. It's taken the best part of 6-8 months to come back from the excitement there for the slack to be taken up, but now it looks as though we're in a position to resume the good work which was done at the end of last year, and at this stage looking for a top of January trendline target rather as high as 2.4 pence, retesting the best levels of last year over the next month, 4 to 6 weeks, and that's particularly valuable while we hold above the 1.2 pence initial July resistance. Just a couple of shares to go. The big move of the day, almost a novelty number, this one, has been Symphony Environmental. Beautiful gap to the upside with the floor of with the top of the gap actually now level with old resistance at 22 pence from April. The ideal scenario today is that we could, for the rest of this week, is we remain above the initial March resistance at 26 pence. And if we do, we've got a best case scenario target up to that December resistance line projection at 60 pence over the next month or so. This stage only really back below 22 pence, really killing the breakout scenario or the lasting breakout scenario for the shares. Finishing off with something less dramatic, but something which looks to be on its way slowly is Extract Resources. Here breaking that line of resistance earlier this month and then consolidating at an uptrend line from March. While we're above that uptrend line, look at 1.15 pence, looking for a best case scenario target here at the March resistance line projection up to 2.4 pence. So be cautious on the shares, wait for a weekly close above a penny and a quarter. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.